On January 9, 2026, history was made in Washington. The city awoke to a moment that would be discussed for generations, a day that would fundamentally challenge the boundaries of American governance. For the first time ever, the Department of Justice served grand jury subpoenas to the Federal Reserve, targeting none other than its sitting chair, Jerome H. Powell. The move was as bold as it was unprecedented, sending ripples through every corridor of power. This wasn't just a legal maneuver, it was a political earthquake. Newsrooms scrambled, and the world watched as the story unfolded in real time. The Federal Reserve, our nation's central bank, is meant to be above partisan battles, steering the economy with independence. Its credibility rests on its ability to make tough decisions free from political interference. Now, its leader faced the threat of criminal indictment from the executive branch. The stakes had never been higher for the institution or its leadership. The news sent shockwaves through financial markets and raised urgent questions about the separation of powers. Investors, economists, and ordinary citizens alike wondered what this meant for the future. For over a century, the Fed's independence has been a cornerstone of economic stability. Its leaders have weathered wars, recessions, and political storms, always striving to keep the economy on course. The DOJ's action shattered that tradition, introducing the specter of political retribution into economic policy. The very foundation of central bank autonomy was now under threat. The message was clear: make the wrong decision, and you could face criminal investigation. The line between policy and politics had never seemed so thin. This is a stress test for one of America's most crucial institutions. The world is watching to see if the Fed can withstand this unprecedented pressure. The implications go far beyond Jerome Powell. They strike at the future of how our economy is managed. The outcome could redefine the relationship between government and the markets for decades to come. Will data and evidence guide policy, or will short-term political needs take over? The answer will shape not just policy, but the very trust Americans place in their institutions. The subpoenas have forced this question into the open, turning a theoretical debate into a real crisis. The world waits, anxious, as the drama unfolds. The stability of our entire economy may now hang in the balance, as the nation faces a test unlike any before. You'd expect a scandal of epic proportions to justify such a move. But the official reason for the subpoenas? A construction project. The DOJ claims Powell's Senate testimony about renovating the Fed's historic buildings was so problematic it warranted a grand jury investigation. These renovations were no secret, publicly discussed, overseen by Congress, and standard for aging government buildings. Legal experts quickly called out the absurdity: criminal charges over a public works project? Normally, disputes like this are handled with hearings or oversight letters, not threats of indictment. The escalation is extreme, and many suspect the stated motive is a cover story. The DOJ, part of the executive branch, is now targeting an independent institution. The official explanation feels thin, like a smokescreen for something deeper. Chair Powell would soon argue this was never about construction at all. The real battle, he claimed, was about power and the Fed's independence. The stage was set for a confrontation unlike any in American history. Jerome Powell didn't stay silent. On January 11th, he issued a forceful public statement, calling the DOJ's investigation a pretext, a false reason masking the real motive. According to Powell, this wasn't about building renovations. It was about the Fed's monetary policy. The administration, he argued, wanted lower interest rates for political gain. The Fed, following its mandate, refused to comply. Powell accused the executive branch of using the Justice Department to intimidate the central bank into submission. This wasn't just a personal legal fight, it was a battle for the Fed's independence. Powell affirmed his respect for the law, but drew a line. Monetary policy must remain insulated from partisan pressure. He challenged Congress and the public to see through the official story and recognize the threat to a critical institution. The stakes were clear. The integrity of America's economic future was on the line. Powell's stand transformed a bureaucratic dispute into a national crisis. To grasp the gravity of this crisis, let's step back. What is the Federal Reserve? The Fed is America's central bank, created in 1913 to ensure a stable financial system. Its dual mandate: maximum employment and stable prices. The Fed sets key interest rates, influencing everything from mortgages to credit cards. Lower rates boost spending and jobs. Higher rates fight inflation. the Fed's decisions impact every American's financial well-being. That's why its independence is so vital. So policy is driven by data, not politics. The current crisis isn't just about one leader, it's about protecting this principle. The Fed's independence is now under direct threat. The Federal Reserve's power to move the economy is immense, shaping everything from jobs to the value of your savings. That's why, from the very beginning, Congress designed the Fed to be independent, so it could make tough decisions without political interference. Independence doesn't mean the Fed is unaccountable. Its leaders are appointed by the President, confirmed by the Senate, and must regularly testify before Congress, answering tough questions about their decisions and policies. But monetary policy must be shielded from the day-to-day pressures of politics, which can be short-sighted and driven by election cycles rather than what's best for the economy in the long run. Politicians often want quick fixes, like pushing for lower interest rates before elections to boost the economy, even if it risks long-term harm or higher inflation down the road. An independent Fed resists this temptation, making difficult choices for the country's future, not just the next election cycle. This means sometimes making unpopular decisions for the greater good. Leaders serve long, staggered terms to insulate them from political cycles, ensuring continuity and stability in economic policy, no matter who is in power. Sometimes, the Fed must raise rates to fight inflation, even if it's deeply unpopular with voters, businesses, and politicians alike. This independence builds trust. Businesses and citizens believe decisions are based on data and expert analysis, not political favors or short-term popularity. If that trust is broken, the Fed's ability to manage the economy collapses, and financial markets can spiral into chaos. That's why Powell's accusation is so explosive. It strikes at the very foundation of the Fed's credibility and independence. He claims the administration is trying to tear down the wall between politics and monetary policy, threatening the careful balance that protects our economy. The consequences could be catastrophic for economic stability, risking higher inflation, market turmoil, and loss of global confidence in the U.S. economy. The fight is about more than one man or one administration. It's about the future of the American economy and whether it remains strong, stable, and trusted for generations to come. Tension between the White House and the Fed isn't new. For decades, presidents and politicians have tried to sway the central bank's decisions, hoping to boost their own political fortunes or avoid economic pain on their watch. In the 1970s, President Nixon pressured Fed Chair Arthur Burns to keep interest rates low before an election, hoping to stimulate the economy and secure his re-election. But this interference backfired, leading to disastrous inflation that spiraled out of control and hurt millions of Americans. The lesson is clear. When the Fed caves to political pressure, everyone pays the price. Inflation erodes savings, devastates family budgets, and undermines trust in the economy. Contrast that with Paul Volcker, who, despite immense political backlash and public anger, raised rates to crush inflation in the 1980s. He faced criticism from Congress, the White House, and the public, but he stood firm. Volcker's unpopular decision set the stage for decades of economic growth and stability. Today, his actions are seen as the gold standard of central bank independence, showing the value of resisting short-term political demands. These stories show why the Fed must be free to make tough, sometimes painful calls, even when politicians object or the public is unhappy. Independence is essential for long-term prosperity. Today's crisis is different. The threat isn't just persuasion, but legal intimidation. The stakes are higher than ever. Using the Justice Department to target a sitting Fed chair is a dangerous escalation, one that could undermine the very foundation of central bank independence. It crosses a line from influence to outright coercion, threatening the checks and balances that protect our economy. The painful lessons of the past are at risk of being forgotten, as history warns us what happens when politics trumps sound policy. The stakes are enormous, whether the Fed can still act as a bulwark against political interference or if it will become just another tool of the government. The outcome will shape the economy for years to come, affecting every American's financial future and the nation's stability. At the heart of this crisis is a policy dispute over interest rates. After a bout of high inflation, Powell's Fed kept rates elevated to ensure inflation was truly defeated. This cautious approach slowed the economy, a political headache for the White House. Administrations almost always want lower rates to boost growth, especially before elections. Powell's public statement made it clear. The Fed believed patience was necessary, while the administration wanted aggressive rate cuts. When the Fed refused, the pressure campaign escalated from criticism to legal threats, using the renovation project as cover. If the Fed gives in, the consequences could be dire. A return of inflation, eroded savings, and shattered credibility. Financial markets would lose trust in the Fed's independence. The result? Volatility, uncertainty, and a weaker economy for everyone. The real danger isn't just higher prices, it's the loss of faith in America's economic stewardship. That's what's truly at stake. Powell's defense wasn't just about the Fed, it was about his own record. He served under both Republican and Democratic presidents, earning a reputation for pragmatism and consensus. Appointed by Obama, elevated by Trump, reappointed by Biden, Powell's career is defined by nonpartisan service. He's not an ideologue but a practical leader focused on the Fed's dual mandate. His background as a lawyer and banker gives him a real-world perspective. Supporters say his loyalty is to the institution, not any party. By highlighting this, Powell framed the DOJ's actions as a partisan attack on a public servant who's always put country first. He reminded the public that his focus remains on price stability and maximum employment. The message: this isn't about politics, it's about protecting the integrity of America's central bank. In his final statement, Powell made a promise to the nation. He pledged to uphold the Fed's integrity, to serve the American people honestly, and not to be swayed by political threats. The independence of the central bank, he argued, is essential for a stable economy. The coming months will test whether our institutions can withstand this pressure. The outcome will set a precedent for the relationship between politics and economic policy. This is about the kind of country we want. One where institutions serve all citizens, not just those in power. Powell has made his stand. Now the challenge is for the nation to recognize the gravity of this moment. The fight for an independent Federal Reserve is a fight for a fairer, more stable economy. The choice we make now will echo for generations.